Can Link continue to rally from here? Let's discuss. So hey everyone, welcome back to Upside Down Data. Today I want to talk about Link and its impressive move out of this range it had been stuck in for more than a year, and whether or not it could continue rallying from here. So after the breakout, we had this really strong move up, and then Link spent some time consolidating at around the $11 mark, kind of bouncing around there. And now in the last couple of days, it's trying to push up even higher. So do we think that Link is going to go and rip further, or might it need to spend more time consolidating at some point, or even have a short-term pullback? Let's talk about those ideas now. So the first thing I want to talk about is one of our models that we have here in the channel, our upside downside potential indicator. So this is the short-term upside downside potential indicator for Link. It cares about moves that play out over days to weeks, so short-term in its time preference. And basically the higher the level, the higher the short-term risk, lower the level, the lower the short-term risk. And one of the things that you'll notice is that in this range, and I talked about this many times while we were down here, the short-term UDPI was bouncing around this similar kind of range where you'd have local tops right around these levels and local bottoms down around these levels. But then with this breakout, we've now seen the short-term UDPI break out to the upside as well. And we've actually really broken out with the short-term UDPI. We've realized a lot of the plausible upside that Link had in the short term from the model's estimation. And we're now sitting all the way up above 3. And in fact, at a similar level to where we've seen local tops form in the past. And so from looking at this, it would not surprise me at all if Link, even with its continuation here, or attempted breakout here, if this is going to be a relatively capped move, not moving too far to the upside, and maybe having to consolidate more up there, maybe have to come back down and try to flip this into support, or maybe even having a bit of a deeper correction. Now, I don't think that that's necessarily a bearish thing. In fact, I don't think it's a bearish thing at all. One of the things that you'd want for Link, if you want to have long-term upside, is a healthy market structure. Things can only go parabolic for so long before crashing off a cliff. And in fact, if we just saw Link ripping vertically to the upside, I would expect whatever correction to come to be quite deep and quite painful. If instead we saw something like we come back down and maybe try to turn this area into support, or even if we come back down to the top of this range and try to flip that into support, I would not necessarily see that as a bad thing. In fact, I would actually see that as a good thing, because it would help create that bullish market structure, the setting in of a higher high and then potentially a higher low before moving on to the upside as well. So obviously none of that's financial advice. You'd have to make your own opinions if we'd see some of those scenarios play out. But that's my thinking here, is that when I'm seeing the short-term UDPI being so extended for Link, it makes me think that continued consolidation or even a short-term pullback is not out of the question by any means, or really would not be surprising. And in fact, I would actually see those as being positive things, and they could just mark great buying opportunities for anyone who wanted to get a bigger position in Link before a potential continuation to the upside. So that's one of the things that I'm looking at right now. Certainly Link could continue to rally further. There's more room to the upside here, but we're starting to get to that point where we're a bit overheated in the short term, and I would not be surprised to see some consolidation, if not a bit of a pullback before a continuation to the upside. So that's one of the things that I'm looking at. But then if we flip to a bit of a longer term view for Link, I'm showing you now our forecast model. So this is basically giving you the probability of upside 6 months in the future. So how likely is it that Link's price will be above where it is right now 6 months in the future? And so 0.5 would be that 50%. So there would be a 50% chance of upside 6 months in the future, and then going up 60, 70, 80, 90, so on and so forth. And what you'll see with the forecast model is that in these bull markets, in these bullish phases, it gets quite bullish. It gets really far up here into the 80s, the 90% chance of upside 6 months in the future. And then that coincides with these points where Link is really moving to the upside. But then vice versa, when you start moving into these bearish phases, then it really falls off a cliff. And in fact, as the market was going, the broader markets were going nuts here in late 2021, the forecast model for Link was saying that there's only a 10% chance of upside 6 months in the future. And indeed, down we went, all the way down here. But then as we went into this range, it started slowly building up. And then really, as we got through to this levels where it started to get really bullish on Link, and indeed that portended this breakout to the upside, that saw this breakout to the upside coming here. Indeed, that's what we've seen. And now it's still very bullish, above 90% currently. That's estimating likelihood of price of Link being above where it is right now 6 months in the future. So that's not 100%, obviously, but it's a heck of a lot better than 10% back over here, and even better than 50%, for example, right in the middle of this range. And so that's where I think, again, that if we were to see, since Link is getting overheated in the short term, consolidation here, or even a short-term pullback down to the top of the range, that wouldn't necessarily be bearish, because we're seeing that in the kind of that longer term view, or in this case more medium term view, 6 months out, it's still a very much a bullish outlook for Link, similar to the things that we've seen in the past here. And certainly I don't think in hindsight, for example, this pullback looks so bad when you know what came after it. Or likewise, even this pullback in the March 2020 crash looks just like a great buying opportunity. So pullbacks always feel bad in the moment. They always feel terrible. But in the long term, you might just look back at this and just say, oh, well, that was just a buy the dip opportunity before we went off somewhere else. So the models are telling me, the story that I'm seeing from the models is short term, that I don't think we're just going to go ripping off immediately to all-time highs. We're probably going to have to spend at least some short-term time consolidating, but that doesn't change that longer-term picture. So obviously not financial advice. You should make your own interpretations of the data and what you think they mean, but that's what the story that I'm gleaning from them right now. So with that in mind, then let's just talk about some price targets for Link that, regardless of whether or not it just continues to rip or if it spends time consolidating like we talked about, or even having to go back and test this upper level, what are some upside targets we might look at, the next places it might visit? So these are some zones that I had put together before Link had really shot up to the upside here. One of the zones I was watching was this general level here that acted as local support back over here in March 22, starting at around $12.50 over here. And Link is actually testing that level right now as I record this. It wicked up into it, is now trading just at around that level. So I think it's going to be useful to watch how Link responds to this price level. If it gets rejected off of here, that might set up that scenario we're just talking about, where we might have to consolidate longer, come back down here, try to hold this as support, or even come back down here and try to flip this into support. But none of those scenarios would be bearish in my opinion, at least in the longer term. So that's one thing that we can watch. The next thing then is, regardless of how that all plays out, if we can get up and break through this resistance, I think the next levels to be watching are right up here, starting at around $18, where we have these local tops and some support in the past for Link as well. This has been a relatively important level here, 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 and here. And so if we could break above this current level at around the $12.50 mark, that would be the next level I'd be looking at for Link to potentially revisit. And it wouldn't surprise me for Link to hit some resistance if we got up to those levels, just given how important that level has been in the past. So those are a few levels that I'm watching. The other thing I'm watching is Link's market cap. So I actually talked about this quite a bit before this breakout, where if you looked at this range that Link was in for over a year, you'll notice that with the market cap, it was very symmetrical. The tops tended to form at basically the same levels. They're very similar levels, and likewise, the bottoms tended to form at pretty symmetrical levels. And you'll notice that's different than price, where with price, the highs actually started to get lower, 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 and we actually dipped down below the range to the downside back here in June of 23. That didn't happen with market cap. And the reason for this is that circulating supply for Link increased while we're in this range. And so because market cap is price times circulating supply, then basically what you have is price going down, but market cap staying at the same level because the circulating supply is higher. You're multiplying the price by a higher number. So one of the things I was talking about with this was that when we saw this breakout of Link's market cap, that actually was an early sign that price was likely to follow, or that there might be this move up beyond the range, not just for market cap, but also for price. It's indeed what we saw. And so likewise, I'd also think it's useful to watch how the market cap reacts to some of these important levels. And one of the things that you'll notice is that this general level, similar to the levels we were talking about right here, you'll see that market cap for Link is actually already broken above that. So that could be an early sign that maybe there is hope for Link to slice up through this resistance and move higher. Or what you might see is that if price gets bogged down in this level, you might see the market cap come and try to hold this level as support. And that might look different than what price does. Price might move down a little bit further, for example, and maybe actually find support a bit above this range, a bit below this range, but that could coincide with it actually just finding support right here on market cap. So that's why I think watching both can be useful, because they have slightly different support and resistance zones. They're acting a little bit differently, but they can tell you something about what the other might do. And so if we do continue up, then I expect market cap to also potentially face some resistance at that similar upside target, right around 8.1 billion. So those are some of the things I'm watching. So then to kind of wrap us up, to sum up what I wanted to talk about here, what I wanted to talk about mainly was that in the short term, I think there's signs that Link is overheating, and some consolidation at the least would not be surprising to me at all. And so that might just look like us just kind of chopping around these levels, maybe kind of bogged down in this resistance level, coming back down, trying to hold this as support, or even trying to hold this as support. But none of those scenarios, in my opinion, would be bearish. And in fact, I think if we can set in a healthier market structure of higher highs, higher lows, higher highs, higher lows, etc., that might allow for a more sustained long-term rally for Link than if we just go vertical here, where we might just end up getting way overextended and then just clearing out the order book, and then there's no bid underneath, and we just crash all the way down and get really strong negative momentum, which could break us down further than if we just had a more slow and methodical move to the upside. So obviously you should make your own views. You should interpret these data as you will and think about what makes the most sense for your evaluation. But these are some of the things that I'm thinking about that I wanted to share here. So if you want to get access to our models and more, you can check out our website, polaritydigital.io. Link is in the description. If you sign up for our Polarity Digital Pro subscription service, you get live access to all of the data from our models and more. And then also, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates, better indicators, and more over there.